In this video, we're going to take a really deep dive into the German DAX. Stay tuned. Hey traders, a very warm welcome to you. So we are going to get stuck right into the DAX. Let's get on it. Let's talk about what we're going to cover. So we're going to cover the DAX, what it's all about, where it's been, where it's going, the constituents of the DAX, some trading ideas for the DAX, look at some correlations. We're going to literally dive right into it and learn all we can about the DAX. So first of all, what is the DAX? It is basically what it is, the top 30 biggest listed companies in Germany. So it's not representative of the whole economy. You haven't got every single company in there, but you've got the big blue chip companies, and we'll look at the constituents in a moment. The index is weighted by market caps. In other words, the higher the market cap of the constituent or the company, the more weighting that's going to have on the DAX. And what that means is if that moves, if that particular stock price moves more aggressively, then that is going to have much more of a weighting or a movement on the DAX than if it was a company with a smaller weighting. We'll look at some correlations in a second, and we'll look at the weightings as well, as we'll list it by weighting. So some kind of facts for you. Started trading in 1987 at a level of 1,000. It's hit an all-time high in June of 2017 of 12,888.95. It can be a very volatile index, and one thing that I will talk about some trading strategies and sort of ideas for taming the beast, if you like, in a second. But one thing that is interesting about the DAX, if you traded it directly on the exchange, so if you went to Eurex and you traded it, via literally trading a futures contract on the exchange, there's a really pretty hefty multiplier with it. And what I mean by that is it's a 25 euro multiplier. So basically, one contract means that if the DAX moves by 1 point, then it's a movement of 25 euros in your account. So if you're long and it goes up by 1 point, so it goes up from say 12,802 to 12,803, you've made 25 euros, and vice versa if it goes down. So if you consider the daily range, and we're going to dig into this kind of stuff in a second, but the daily range and how it moves, if it moves 100 points in a day, very, very likely, that's a 2,500 euro swing. So this is for one contract. So this is kind of interesting from a perspective of traders who don't have access to CFDs or spread bet, which is a really great way to trade the DAX because you can dial down that volatility. Not many retail traders can stomach a multiple contract position size in the DAX, in the futures, and kind of swing trade just because of the magnitude of the move. So this is why it can be very, very volatile. And again, we'll look at that in a second. It's sensitive to, as you would expect, ECB data, European data, obviously, as well as kind of internal data with the company, with the country. It's the biggest economy in Europe, but obviously it's affected by its neighbours. It's affected by kind of things going on globally, like Russia and the US, because all these companies obviously do business internationally as well. So very sensitive to euro, very sensitive to interest rates, very sensitive to kind of domestic economic data. Let's look at constituents. This is courtesy of Wikipedia, and I've kind of listed these by weighting. So number one, we've got Siemens. Most of us are familiar with that. The weighting of that is 10% of the index. So in other words, if we look at this picture now, we've got Siemens, we've got Bayer, we've got SAP, BASF, Allianz, Daimler, Deutsche Telekom, Adidas. Then it starts to drip off, doesn't it? If we look at the top kind of 4 or 5, they're giving us sort of 50% of the index. So what that kind of means is that it's really heavily weighted. So those guys are the ones commanding the movement of the DAX. If those guys are moving up aggressively intraday, the DAX is going to be moving like a rocket. If those guys are moving in sync to the downside, you're going to get a lot of movement. So this is kind of the thing that you have when you have a weighted index by market cap, especially when it's more dominated by a group of guys in the top. So most of these we may be familiar with, obviously Adidas, Deutsche Post, BMW, Volkswagen, Deutsche Bank. You can see a kind of familiarity here, a lot of manufacturing constituents, a lot of kind of really big players in the industry world, and then going down to the very, very lower end of it. And these, because the weighting of these is, some of these is less than 1%. You've got Commerzbank, Lufthansa, that kind of thing. They're not even going to be even making a dent on the DAX. If they're moving aggressively, because it's such a small weighting. You can see, if you have a weighting of 10%, you're getting 10 times the movement in the DAX as you would if Siemens moved, say, 5% versus Lufthansa moving 5%. You can see the magnitude of difference you'll get on it. But that's for a reason. I mean, obviously, the bigger market cap that you have, the less likely you're going to get huge swings. So it kind of works and dampens things down for it. Before we go into trading it, let's have a look at a chart, and let's bring up a chart and let's see exactly what it's all about. Alright, so here we are. We've got a DAX chart up now, a daily DAX chart. Let's go and have a look at the weekly chart and see kind of where we've been and where we've gone. The cycles we've had, pretty standard stuff with most economies, as you're aware. 2000 obviously the top, and then we had a bit of a pushback there. One of the biggest bull runs we ever had was sort of 2002 to 2007. That really aggressive bull run from kind of 2,300 all the way up to 8,000. Really good run. Then obviously we had the crisis and what have you, 2007, pushing us down for a couple of years. And since then, we've had a nice steady bull run with little dips and ebbs and flows in between. In terms of average range of the day, I've got an average true range here up, and I've put kind of an ATR of 14, which is give it a smooth length for a couple of weeks, about right. But if you look at this, and we'll compare it to some other indices in a moment, and let me get on a daily chart so we get the right data. If you look at this, we're well above 100 points move. We're looking at sort of 130, 120s, and when it's really excitable, it's not unusual to be doing kind of 200 points in a day. And when we're really kicking off with bear market moves, it's doing way more than that. And considering the value of the DAX back then, to be doing that kind of stuff shows you how volatile this bad boy can be. And if we compare it very quickly, if you have that in your mind there, that we're looking at kind of 130 points move, and compare that to something like the FTSE, a way more significant moves. The FTSE's doing 60s or so, and if we look at by the way, the FTSE obviously is the UK 100 shares, and we look at the CAC, which is the French equivalent, and look again, the kind of range is way lower. So the DAX is a decently volatile, decent ranging instrument, correlated with the FTSE somewhat, but it kind of runs to its own tune. If we add, let's say we'll stick in let's stick a FTSE below, and let's just have a little look and see what's going on here, comparing the two. So you can see that we kind of have some correlation with the push up and the kind of ebbs and flows and lows, but in reality the DAX is a lot more aggressive and a lot more of a volatile beast. If we go back now to the slides, and let's talk about why it's so popular with many traders. Listen, I believe it's popular with many traders for a few reasons. One is it's such a great value index to trade, and what I mean by that is, if you go and trade it with, you've got a 1 point spread, and you've got 100, and we saw by the ATR, the kind of range of movement is 130 odd ticks, which means that the spread is almost irrelevant. When you compare it to some other stuff, like if you were trading stocks and stuff, if you're intraday trading the DAX, you get a lot of bang for your buck, meaning that the spread is irrelevant compared to the range in the day, which is such a good thing as a trader, because the spread, hidden cost, if we can get a low spread, great. Another thing is that obviously with that volatility comes opportunity. Even if you're swing trading, day trading, whatever you're doing, the more volatile the market is, the more chance you've got of having multiple opportunities, whatever your strategies may be. So you miss an opportunity in the morning, there'll be others coming along. Whereas if you're trading some of the steady eddy kind of grinding markets, you might only have one opportunity and it's gone. Same with the kind of swing trading. You're going to have the opportunities coming at you frequently to get involved in it. Obviously, a double-edged sword, guys. You can't just say you have opportunity without taking some risk on. There's a little bit of more risk involved in the DAX. It's a lot more volatile. It swings around a lot more aggressive. And I believe that part of that is because of the higher futures contract value. So if you're going direct to the exchange, you'll notice, actually, if we bring up another chart, I'm not sure whether we've got one here to hand, but if we kind of bring up a daily chart, and if I can find one for you, I will. But when we break through lows or highs, in other words, when we take out stops, we kind of properly take them out. We don't just flick through and do a couple of ticks like you might get with the S&P 500, because And this is not a bad example of it. It's not a perfect one, but this will do us for now. It gives us an idea of what I'm talking about. When we take out our lows and we take out some stops, the flush we get is pretty hefty. And this is, bearing in mind, this is just a normal kind of chugging day. We're not going back to the bear markets or really aggressive downtrend moves or even kind of retracements we get after a bull run. Those are the ones that really flush through the lows. And it's because the liquidity dries up. If you're watching it on the market depth, you see that when those bids are hitting those market depth, all the bids, when the sells are hitting those bids, all the bids disappear, liquidity goes, and of course someone just selling kind of 100 contracts rips through quite a lot of levels, and that is moved, and that is represented to us when we're trading on. Now, one thing to point out, guys, is that the DAX isn't called the DAX with the spread betting firms and the CFD firms, and that is purely a trademark issue. The DAX is owned by the DAX, is a trademark thing. The spread betting firms and CFD firms can't be calling it the DAX because actually it's not either. And if you look at the quote, it doesn't mirror the actual DAX, especially the cash. The futures may well do, but they've got their own spread on it as well. So, even though it's not actually the DAX, it's close enough. The chart is almost identical, and they will settle based on the DAX. So they can do that, but they can't actually call it the DAX. We're looking for stuff like German 30, GER 30, that kind of thing. It'll be pretty clear. Correlations we talked about, it is very correlated with, things like FTSE CAC. It goes, when I say very correlated, I don't mean tick for tick. I mean that, generally speaking, if your DAX is up, your FTSE is going to be up, your CAC is going to be up. Yes, there are times when this doesn't come into play, and when you see currencies going out of sync and more kind of news flow coming from Europe as opposed to UK or whatever it may be. Yes, they will go out of sync, but that's generally how it will work. How it trades intraday, let's skip on to that. We'll come back to pitfalls and caution in a second. So intraday, we're opening at 8 o'clock in the morning UK time. We're trading at the open. It kind of trades its own thing. It's going to trade based on what the US futures have done overnight. It's going to trade on whether we've got any data coming out during the day. That kind of stuff, usual thing. Go and check out some videos I've done previously on trading stuff intraday. But as we go to the afternoon, US is going to come more into play as the Americans wake up and the Dow and the S&P 500 start getting into gear. The DAX may well start to follow it. Now, a caveat to this, guys, is that this is cyclical depending on what year we're in. I've traded the DAX kind of 7-8 years ago where it would literally just mirror the US market in the afternoon completely, and then we've gone through phases where it just comes completely out of sync with it. US might be flying, the DAX might be struggling. So for me to just say the broad correlation there would be misleading. You've got to kind of see what's happening in the time, in the week, in the month, and the period to see where it's correlated. But obviously things we need to make look of correlations or inverse correlations is things like the euro US dollar, things like the CAC, things like the FTSE, and things like the US indices. If we can look at that, then we can kind of judge and gauge a little bit of a strategy around it. So, trading quirks and pitfalls and caution. I already talked about literally the aggressiveness of the market when it pushes through lows. So if we had a low point here and the price was coming down to it and we were already perhaps down quite a lot and we're already reasonably volatile, when this thing hammers through lows, this thing goes, and that's why you get those really deep wicks. You get really kind of aggressive moves. So if you're the kind of trader that likes to play against that, you like to kind of, if you're short and like to cover into those stops and they're getting pinged, DAX is beautiful for you. But the flip side of that, of course, is that your stops are going to have to be pretty wide. If you're playing kind of traditional kind of game of buying at support, you're going to have to literally either have a really wide stop or adjust your game to suit, because as I say, when it breaks through levels, it breaks through levels. And just another thing, even if it's not going to bounce back up again, often it'll break through and it will run and run and run and run, and it really does pick up steam. When this bad boy is rolling, it is rolling. So you've got to be comfortable with it, and that's a good thing about trading kind of on CFD or spread bet platform, is that you can dial down the size. You don't have to be trading at 25 euros a point. You can dial it right down so you can scale in and out of your position. You can have a relatively small size. You can dampen that volatility yet still take advantage of those swings and moves. Pitfalls and cautions, I would just say the general things, guys, are standard stuff. Be very mindful of risk on DAX. You can get caught out very, very quickly. Don't ever add to the position blindly. And it because it flips from kind of relatively calm volatility all the way up to very aggressive volatility. You can kind of get yourself caught in a false sense of security. You feel like you've got control of it, it's moving around, then all of a sudden it will shift gears and it will just suddenly just rip off without any pullback. And if you're not disciplined enough to cut it, if you're on the wrong side of it, that's when damage can be done. Okay guys, that's the DAX. Great market. I love trading the DAX. I hope that this has made you a little bit more informed, and if you've got any input, please do so. Stick it in the comments below. If you like this video, give it a thumbs up. Don't forget to subscribe for more videos from me and others on this channel, where we're going to deep dive into other markets as well, and to find the best market for you to trade. Good trading, guys. Keep your risk managed. Take care. Bye bye.